Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. Today, we will be putting in focus a trend that I feel is quite concerning and felt that I should make a video about to give a bit of perspective as to what might be going on. Well, what is going on? On Thursday, January 14th, Petco went public via IPO. For this video, I will use the terms IPO and SPAC so that you can follow. These are both ways that private companies can get themselves listed on major exchanges, such as the New York Stock Exchange or the NASDAQ. Once they have, you can buy shares of that company, or in this case, of Petco. Earlier today, at 11 a.m. EST, shares of Petco, ticker symbol WOOF, became publicly available to be bought and sold. The initial price per share was $18. Within minutes of being available, such a great amount of people bought this stock that the price rose to almost $27 a share. By the end of the day, the price had landed at $29.40. A pretty good day, I would say. However, herein lies the problem. This typically doesn't happen. In fact, it's highly unusual. According to Reuters, the average day one gain of IPOs is almost 24% throughout 2020. Compare this to 2019, when the average day one gain was 12.8%, and to 2018, when it was just 13.4%. Petco's day one gain stands at 63%. But the question is, why is this a problem? It's a strong indication that the market as a whole is overvalued. Essentially, institutional traders and retail traders are buying up immense amounts of shares of these IPOs at whatever price they can, unconcerned if the underlying company is even worth these valuations. Just to give you a few more examples, Snowflake, a cloud-based data warehousing company, was projected to open at $120 a share earlier this year. But after an overwhelming amount of buy orders, the company opened at $245 per share. That's a 112% increase. A little while after this, DoorDash also went public, initially offering shares at $102. They too spiked to open at a whopping $188. Finally, I want to talk about Airbnb, another successful IPO that opened around the same time as DoorDash. They initially offered shares at $68 per share. Then, they had a tremendous gain, opening at roughly $140. All these companies are continuing to soar, and I want to take a closer look, particularly at Airbnb for a minute. I use a website called Morningstar to help me find value in companies, and as a part of their premium service, they offer a valuation tool run by the analysts over at Morningstar to help you get a better picture of what a good price per share for a company is. Looking at Airbnb's valuation, Morningstar estimates its fair value at $60. However, Airbnb's current price per share is $180.50. Morningstar suggests this company is overvalued by 183%. Now, Morningstar's analysts aren't perfect, obviously. However, I find their value metrics fairly accurate. They have a proven track record. Is Airbnb, an unproven vacation home rental business, worth $180 plus per share? Honestly, I'm not convinced, considering they can barely turn a profit. Now, we can go through the rest of the companies that I've mentioned, and they all do the same, at least through the lens of Morningstar's analysts. But for the sake of this video, I'll wrap it up here. These are odd times for the market. It seems that these crazy valuations are propping up companies with otherwise no real solid value because institutional and retail traders are amassing large amounts through buy orders on day one, which raises the costs per share via the demand for these IPOs. I'm not going to say that there is a crash coming. I'm not suggesting, nor can I predict this. I'm not a professional, just a learner. I'm also not saying that you should stay out of the stock market either, because it might be overvalued. I merely say this as a word of warning. Do not get swept up in the hype of a mediocre business that you don't fully understand at an insane day one valuation. I generally don't buy IPOs. Really, the only business to IPO in 2020 that I liked was Snowflake because, the cloud is the future. Anyway, I hope I could provide some insight into the craziness of the market this week. Like I always say, I'm no expert. It could very well happen that these companies rise to the expectations the market has placed on them. It could turn out that they are far more valuable than even their current share price. And this video could age like fine milk. But I guess we'll find out in the future, together. Just be careful, and I will see all of you in the next episode of Dollars and Cents.